The market has spoken, and it doesn't look like GNC will survive its decision. If you guys are a regular on my channel, this will be the third video out of the last 7 weeks that I've had on GNC. So the question is why so much attention? But I hope this video will help answer that question. In this video, I want to kind of tackle or highlight 3 areas. First one is going to be around GNC's 2020 quarter 1 earnings report, highlight some of the financial data on that. Also want to cover some important commentary from today's earnings call. They did not have any analyst questions. This was the second earnings call in a row that they did not have any analyst questions, which is not usually a good thing when you don't take those questions. You don't feel super confident answering those questions about your business. And it also will highlight a few kind of news stories that have happened since I uploaded the last video on April 10th. And my hope is that I'm going to package all that up and provide some insights that will be important for you guys to know if you are a stakeholder within the functional CPG industry. So let's start with the few financial metrics right off the bat. The 2020 quarter 1 revenue for GNC was $472.6 million in the first quarter. That was down 16.3% year over year, or about $92.2 million. And what comprised of that $92.2 million difference is 44.1% came from same-store sales losses, both on the franchise and the corporate-owned side, of which they're saying about 20 million of that was COVID-19 related. Then you had 20.7 coming from store optimization, store closings. You had $6.4 million coming from same-store sales losses from the international stores. And then the rest of it came from the closures of the manufacturing facility and some intersegment sales from kind of losses of total stores from the Rite Aid store within a store concept, because Walgreens actually bought a portion of their store locations and closed those GNC locations. Just kind of jumping into segment sales within GNC, talking about first the domestic, which now in quarter 1 accounts for just under 90% of the total GNC revenue. That's up from last quarter. I think it was somewhere around 88%. So this is becoming a bigger portion of GNC's revenue. They had $424.2 million in top line revenue. That was down 13.3% year over year. In terms of same store comp numbers, they had a 10.1% negative same store comps on the corporate side, just a little better than the franchise side did. They were 10.2% down on a same store comps number. But they're saying excluding things that impacted from COVID-19 on the retailing environment, GNC predicted that the company-owned, corporate-owned ones would have actually been only about down 4.4% this quarter. Moving over to the international side of GNC, the revenue was $33.5 million. That was down 18% year over year. They saw softness across all of their particular international markets that they have store locations in, but they did specifically highlight that there was a softness in the Asian markets, which is a part of a joint venture with Harbin Pharmaceutical, their biggest shareholder at this point. Now, moving into a small bright spot for GNC is their digital sales. And this quarter, their digital sales were $45 million. That was up 24.3% year over year, but sequentially, it was down a little bit. They actually noted in the earnings call that March of this quarter, the last month of the first quarter, they actually saw a 61% year over year growth on digital sales. Like I said, this is kind of a bright spot, a small bright spot for GNC. If you just consider nutritional supplement online retailers, you think about Vitamin Shop, you think about bodybuilding.com, GNC is the largest one. Now, if you take this up another layer, it's very small comparable to some of the online marketplaces, specifically Amazon and then Walmart as well. There would be some additional online retailers that carry a bunch of different categories that would be a little bit bigger as well. But overall, if you're just considering it against like pure play specialty supplement online retailers, they are bigger than both bodybuilding.com is right now and Vitamin Shop. Additionally, this quarter, they mentioned their ability to kind of launch or kind of move up some things in terms of like their omni-channel fulfillment strategy. They were offering curbside pickup, contactless curbside pickup because of the COVID-19 retailing environment and some of the restrictions within state and local governments. And then more importantly, they finally started to do some of their like hyper local fulfillment in 100 stores, which has been something that GNC has been talking about for a while. This is still a very new thing for GNC, but it is very important right now for them because they have a number of stores, which I'll talk about next, that are closed. And if they're closed, they're not able to utilize that inventory that's in those stores, which is problematic at this point. And GNC needs to utilize those stores as essentially shipping points. And this offers them that ability. Obviously, you need to focus with digital sales on how quick you can get that product to customers. But GNC has that other kind of issue right now with inventory that's sitting on shelf that they cannot utilize. And I think GNC on the call said it was somewhere around like $80 million of inventory that's sitting in store locations that are closed. Now, if hyper-local fulfillment seems like something new and something you've not heard about, I would ask that you jump back to a Medium article that I wrote in August of 2016 around GNC that was really telling them to utilize their stores for micro fulfillment. These kind of terms all blend together, but was something that a lot of people thought was more like a futuristic thought, but is really proving out to be something that is extremely needed in this environment and in the future. Now, talking about store closures, store optimization plan as a whole, we'll cover just like the planned closures first off. And as of the end of Q1, so the end of March, they did have a total global store count of 7,288. That was down 920 year over year from the first quarter of 2019. Of that 920 that were gone, you had 311, which were domestic corporate-owned stores. You had 86 of them that were domestic franchises. You have 42 of them that were international. And then the vast majority of them, 481 of them, were the Rite Aid store within a store concepts. A lot of those were being closed with Walgreens purchasing a selection of stores from Rite Aid that I mentioned earlier in this video. Outside of the planned store optimization plan, or just the acceleration of the store optimization plan, let's talk about some of like the COVID-19 store closures. Last video that I did, they mentioned that they had around 900 stores that were closed, temporarily closed because of COVID-19 state and local, or in most cases with GNC, it was around mall locations that the malls were just closed totally. In the earnings report, they did say that number ballooned up to 1,100, which was about like 30% of the domestic store counts. But on the earnings call, Ken Martindale actually increased that even further and said there was temporary closures of about 1,400 GNC locations temporarily, but they did get another 100 online sometime in May as parts of the United States start to open up again. He also mentioned that 25% of the international locations had been closed in the first quarter of 2020 because of COVID-19 and just some of the issues with international markets and the closures of countries. And I mentioned this in the last video, but there's a kind of a disagreement, be it from the interpretation of the federal guidelines of essential, non-essential businesses. The interpretation from the Department of Homeland Security is that GNC and other supplement and health food stores should be opened, but state and local governments have superseded a lot of that and have actually interpreted that in a different way and put different restrictions in there. So that's why you are seeing a large number of GNC store locations that are closed outside of malls. If you do take out the 800 or so estimated mall locations that are closed, and you only look at this as about 1,300 locations, but if you take the 1,400 and then the 100 that's back online, that 500 that's remaining is actually in line with the percentage that the franchise group, which is the owner now of the Vitamin Shop, has reported in terms of their store closures as well. So it's about 12 to 14% of the total store fleet that is closed because of different interpretations with the state and local governments. Now, moving out of stores and looking at like human capital costs in terms of what GNC has cut on that side of the business. If you guys remember last video, I did mention about the news announcement, the press release that GNC was furloughing a bunch of their employees, but there wasn't specifics in that press release. But CEO Ken Martindale did add some details to that in the earnings call that just happened today. He did mention that 3,800 store associates were on furlough. You had about 200 of the corporate employees that were also furloughed. That's about 40% of the workforce. There's still a hiring freeze that's in place right now. Jumping out of the human costs and kind of back into just cost cutting and also just like cost extension measures that GNC has been kind of undertaking because of some of the stuff that I'm going to talk about at the end of this video. In the earnings report, GNC did mention that they withheld rent and other occupancy payments of approximately $19 million in April of 2020. So this is outside of the quarter, but they also had currently $16 million that they have withheld in May. So they were a little bit forward looking and tell us that information. They're not currently in a lot of their locations paying rent. Those might be because their stores are closed. Also because those stores are at a point where they are not profitable. There's a number of things, reasons why they were doing that, but GNC is trying to cut costs or at least extend some terms and things. And they're doing that also on the vendor side as well. They're lowering their inventory, total inventory as a whole. They're also kind of canceling orders. They're pushing like new product orders, new merchandising to the future after they can kind of get through some of this stuff. They're also pushing some of the terms with their vendors and short paying invoices and things. Wherever they can kind of save money, they are very much in a liquidity issue here and a cash issue right now. And they are trying to pull out whatever stops they can. Now, before we get into the big elephant in the room, I did want to talk about one other kind of like financial markets thing within GNC, and that is actually that GNC, as of April 22nd, the New York Stock Exchange actually sent GNC a letter that said they were not in compliance of two rules, and that is that there has to be an average of the last 30 trading days that your stock is over $1 per share, and then also that you have a market capitalization over $50 million. So as of April 21st, in terms of the letter, New York Stock Exchange did say that GNC's average closing share price was 56 cents, and the market capitalization was $47.3 million. So this is definitely the least of GNC's worries, I guess, if you consider all the other things that are going on with the company, but they need to be worried about this because it likely reduces the liquidity in the market price of the shares. That reduces the number of investors willing to hold and acquire shares. Also, just who can acquire and hold shares, sometimes institutional investments, sometimes maybe that's pension funds, maybe that is index funds, things like that. When you drop out of major stock exchanges or your credit rating and a bunch of other things, that might limit the amount of people that would be interested in GNC as a stock. It also does limit their availability of accessing equity markets for additional financing, additional capital raises. And then on the employee side, if you don't have equity as an option for compensation, that could affect especially some of your higher level employees in terms of sustaining them or their ability to attract new talent. Now, to complete this video, I did want to talk about the impending and now very probable bankruptcy with GNC. I won't bore you with kind of all the details specifically, but I do want to cover some of the basics about what is happening with GNC and their debt load as a whole. The auditors have issued a going concern with GNC, which basically means that they don't trust that GNC will be in business past 12 months. That triggered a clause within their debt load. If you were going to have a going concern, that actually sprung up the maturity date from late Q1 of 2021 into this is something that's going to happen within a week's time, that there is going to be springing maturity date on the debt load that GNC has. And there's zero chance that GNC has any operational ability to pay back that debt, that amount of debt load. There's 0%. So because of that, GNC has kind of several options. First, and kind of the most likely, is that they can ask these lenders to not enforce that springing maturity date. That will give GNC a longer runway and gives them some breathing room to start to look at some other options. Second is to seek refinancing and restructuring of the debt. It's pretty unlikely that something like this would happen. They have looked at Asian markets, but I think the one that they had highlighted, assuming that was somebody like Harbin Pharmaceutical, they actually have backed out. Now, the other kind of things that people have been talking about with GNC is that, hey, maybe they have some available assets within their business that maybe they could sell off to pay some of this debt. They don't have anything, at least from my perspective, worth enough to cover any of the debt load, especially from the springing maturity date. They don't have any assets available to make a deal like that. Second is a lot of people are talking about the CARES Act and that GNC should get some access to capital from the government. I'm on the side that I do not believe that they're going to have any access to that. I think because of the poor financial performance prior to COVID-19, also that GNC is in a highly desirable category and it's still not performing to the best of their levels. I think that a government committee, and I think at the level that GNC's at and some of these retailers like Neiman Marcus or a J. Crew, or, when you're talking about billions of dollars in transactions yearly, you're going to be in a level where there's actually going to be a committee that has to look at some things. So I don't think GNC is going to ever pass the sniff test with those people. Now, if they can't come to terms with anything out of the court system, they're more than likely going to have to file Chapter 11 and have to go through that with a renegotiated restructuring plan. GNC is kind of steadfast in believing that the lenders will believe that it is in their best interest to not enforce that springing maturity date and give GNC some chance to kind of work through some things here. GNC has really been bullish around that. They have an accelerated and deeper store optimization plan based around some of the things that have happened with COVID-19. They also think their current transformation plans, including their focus on digital, omnichannel, some merchandising they believe is going to work out. And they think health-related kind of post-COVID-19 consumer behaviors are going to make GNC even more attractive as a specialty retailer in health and fitness related consumer goods categories. So I'll leave this video like I have on a number of ones recently and ask you a question. Do you believe that GNC will make it out of 2020 without being in bankruptcy? Or do you think I'll be making a video next week that covers GNC having to file voluntarily in Chapter 11 in the U.S. bankruptcy court system?
Thank you so much for watching this video. If you want to help support me, make sure you guys hit that thumbs up button on this video. If this is the first time you've been introduced to my videos. Would love for you guys to be a part of my community by subscribing to my channel. I upload several videos just like this weekly. And if you guys want to connect further outside of this platform, I do include all of my social media links down below. I just want to thank you guys again for your time. Hopefully I gave you some value in return, and we'll see you guys on the next video.